Hey everyone, Tom here. I want to welcome you to the Cash Flow Summit. We're about to hit the unofficial start to summer. And what I want to show you is probably unlike anything you've ever seen before. So before I start my presentation, I want to welcome all of you that are out there, wherever you're coming in from. Welcome, welcome. Glad to have you here. I know you took time out of your schedule. I did. And whether you are catching this live or whether you're catching this by recording, I want to thank you for joining me. Now, if you know me, then you know I've developed dozens of proprietary systems over the years, including the money calendar. And I've seen just about every angle when it comes to making money in the markets. But the strategy I want to talk about today, this is different. It started with a very simple idea. What if, now I know this might sound like a tall tale, but what if I told you that Wall Street's biggest companies could pay your bills? I know it's hard to just sit here and take a breath, all right? I'm talking about a specific kind of trade that has over a 90% statistical probability of success. So here's where I'm at. I want to start with this. Let me put this up on the screen here real quick for everybody to see. There we go. So this is what it cost the average American each month. I pulled this up online, all right? Let me make it bigger so everybody can see it. This is what it costs each month for the average American household. $387 a month on groceries, $156 at the gas pump, $123 for a cell phone plan. Let me stop right there. My plan's actually cheaper, but my groceries are more expensive. $189 for internet or streaming, $1,108 on the mortgage. That's cheap. $438 for insurance, $129 for prescriptions and medical. And I'm sure there's a bigger list than that. I get that. There's a bigger list of that. But I don't know about you, but when I look at these numbers as a whole, my family, way above the average. Where do you sit in at? Whether you're paying these prices or more, the strategy I want to show you is going to have literally the market paying these bills for you. All right. So imagine Walmart's going to pay your groceries. Chevron's going to pay your gas. United Healthcare is going to handle your healthcare, and so on and so on. And it's not just a theory, folks. This is all time tested and data driven. All right. It's a strategy that's used by some of the wealthiest traders in the world. And today I want to share it with you because I know this from experience. This is how real wealth and income is built. Not moonshots, not hype, but consistent income trades that pay out week after week, month after month. Let me tell you this. So far, 2025, this strategy, and this is real results, 100% win rate, okay? I'm going to show you all of the trades before we're done. Now, before we begin, I want to mention this. I've seen a lot of so-called experts online, and there's a ton of them, right? Talking about everything from AI to smart money and everything in the middle, but they fall short when it comes to actually understanding what they're doing. In fact, just recently, I got done watching one of the biggest traders on the planet talking in a webinar. Turns out he was all sizzle and no steak, meaning he really didn't teach anything. These folks just talk a lot. If you really want to see what they're doing, you got to sign up for their services blind, meaning that you have to go through the paywall before you see exactly what they're doing. I'm not that guy. I believe in actually teaching you some of my best strategies that are under my belt, giving you the education and even a trade or two to walk away with. And then if you like what you see and you want to continue joining me, that's your choice. So here's what I'm going to do for you. On this webinar, I'm going to teach you this strategy step by step. I'm going to show you exactly how I scan and how you can too. I'm going to show you some opportunities that are happening right now. And then I'm going to walk you through an actual trade that I just did. All right, from start to finish, even placing the order with my broker. So let's go ahead and dive in. So now I want to move right here. Let's open this up. Let's start right here. Here we go. Let me talk about what we don't do. I don't trade on hope. I don't trade on hype. I don't trade on fear. I don't trade on greed. All right. I am what is called a rules-based trader. This is what I teach. Okay. This is what I do. An evolution of a rules-based trader. You know, when you become a trader, when you're coming into this business firsthand, first of all, most people who come in don't think of it as a business. You got to get past that initial FOMO, hype, greed, fear area. And eventually what you'll do is you'll start to analyze things, right? And that's where most people go into becoming technical traders. Now, I have a red line through this because I call this in my life, the confused portion of being a trader, meaning that there's all kinds of information out there that you can look at for technical analysis. The problem is the more technical indicators that you use, the more confusing it's going to get. I have a buddy of mine who he sets his chart up where he's got more indicators on the bottom 2/3 of the screen. At the very top, he's got the chart. And honestly, his chart is so small at the top, I can't tell what's going on. And I ask him, I go, how do you know what to buy or sell? He mumbles an answer to me, but I think he has the same problem a lot of folks do, which is called analysis paralysis. What I like to do is take a few good things that work and put them into what I call rules-based trading. Rules-based trading is you take objective rules that you can understand, and then you back test them, all right, with a lot of data. You find out what works, what doesn't. You throw out what doesn't work. You find what works, and you look to tweak it to try to make it better. Now, these are the 5 areas that I believe work for a rules-based trader. If you're a trend trader, you can spot rules and you can put them to work. If you're a contrarian trader and you can spot rules, you can put those to work too. You can trade volatility. Volatility is a rules-based trading strategy. Statistical, which is what we're going to talk about today, is a rules-based trading strategy. Seasonality is one of my favorite rules-based trading strategies. You know this because I talk a lot about the money calendar. But today I want to get into just statistics with you. All right? Statistics might be, if you understand baseball, then baseball scouts go out and they scout players for their team. You know, a lot of people play fantasy football. And if you play fantasy football, then you're also going out and scouting a player for your fantasy football league that's going to help you. It's going to help you win. We do this in trading. And one of my favorite strategies is using statistics to help me in trading, but that's not all. So let's start with a stock that's been getting the news, that's been in the news for literally the last month, and that's United Healthcare. UNH was trading at over $600 a share this time last month. And in the last month, it has lost more money than the stock price is currently. So I had the stock price trading at around 262, less than 263, all right, 262, 263, just yesterday. And so now we didn't lose $321 in one day. It took a month, but still buying UNH today, you're talking about buying it for 55% off what it was trading at a month ago. And this is widely regarded as one of the top healthcare providers in America. It's been hit hard recently because of the talks of Medicare fraud. They've had all kinds of problems, all right? From the CEO getting shot in New York to the latest CEO just up and leaving, and now talks of Medicare fraud. And so this has pushed this stock down. And, you know, a lot of people were thinking, this is a big name company. This is not going to go away. If something happened to United Healthcare, this would be a detrimental hit to the medical community. And so there's talk of potentially a backstop. Also, this company is going to lawyer up. And this is going to be a longer drawn out process. What I'm saying is that a lot of people in the community are saying that this might be a value play. So if it's a value play, are we going to buy this stock at current prices? And I know, my family trust has gone in and bought some UNH because we're looking at a multi-year horizon here, which means it might fluctuate here or there, but that's an investment. If you're thinking about this as a trade and you're looking at buying it, it could have some more drawdown. Could it go down another 10 or 20% or more? Yeah, most certainly could. But I want you to think about this as a trader. As a trader, if you're buying a stock like this and you have a short-term time horizon on it, you really are looking at it statistically like a coin flip. All right, if I'm flipping a coin, heads or tails, 50-50 probability it's going to land on heads or tail. And I want you to think about the stock. Statistically, a stock going up or down tomorrow, next week, next month, for about 3 months is the time horizon I'm looking at. You have statistically the chance of that going up or down like a coin flip. So if that's the case, are there strategies where we could increase our odds of that coin flip being at 70, 80, 90% or better? And the answer is yes. So what if I told you that I could pay you $400 for a 60-day obligation to buy 100 shares of UNH at not $262.98, but how about $160 a share? All right, that's 40% below today's price. What if I told you I'd pay you $400 to do that? Would you do it? I would do it all day long. And I'm going to tell you why. Because I'm not buying at the market. I'm being paid to obligate myself to buy it down here, away from the market. Right? So that's what we're talking about is in terms of bending probabilities. Now, to bend probabilities means we got to look at options. So what is an option? Very quickly, for any of you that are watching this who do not know what an option is, very simply put, it's a contract between a buyer and seller. The buyer of the option has a right to buy whatever it is on that contract. The seller's obligated to sell on that contract, or in this case, buy the stock. All right, I'm going to get into that in just a moment. But keep this in mind. Option buyers have rights. Option sellers are obligated. Think about this with real estate contracts for a moment. If you purchase a home, let's say you go out and you buy a home, you're going to sign a contract with the seller, right? You're going to be the buyer. You're not going to step into that home that day, all right? You're going to have a closing date in the future, but you're going to have a set price and you're going to have a set time to close on that house. You're going to put down a deposit for that house, right? Now, if that house is an as-is house, then you're putting a deposit down and you're taking it as is. You might do an inspection on the house, but you're still taking it as is. And if you walk away from the deal, you lose that deposit. So I want you to think about that for a moment with the stock market, because that's what we're doing. We're the seller of that house, of that asset. We're taking a deposit, and we're selling that. We're going to obligate ourselves to deliver as is, which means what I'm looking for is I'm looking for the buyer of my option to pretty much walk away from that deal 9 out of 10 times. And that's what's been happening. It's been happening for years now, folks. Okay. And I'm going to show you proof of buyers walking away and me keeping that deposit, or most of that deposit, for the most part going forward. So, couple of other things that I want to talk about and the stance that we take. There are basic bullish positions that we can do. There's tons of different positions that I can take advantage of with United Healthcare. I can buy the stock, and my family did do that just recently. I mean, just recently. Now that comes with large risks, large rewards, and there's no statistical probability there. That's more of an investment. But also number two is that I could buy a call option on that. Okay, I'm going to blow this up so everybody can see it. I could buy the call option. Now, with a call option, I do have large upside rewards. I have a fixed risk, but I have what's called negative statistical probability, because you know what I need this stock to do? I need the stock to move in order for that option to be to make money. here's the thing. With the strategy I'm going to teach you, it's going to need to move a lot. It's going to need to move a whole lot for someone who takes the call option to make money, because I'm selling very expensive premium. Okay. I'm selling these in the news types of positions, and they're going to come that we get a much more money than average that comes in. So what I am doing is I'm doing something called the short put. So what I'm going to talk about what the short put is in just a moment. But the reason I like this trade is because it has large rewards. It does have large risks. We could take the stock, but I'm taking the stock at a better price. And because of that, it gives me what's called positive statistical probability. All right. So by looking at the options, the reason buying calls doesn't make sense is because they pay a premium for this right. When you buy a call option, you're paying premium. And I buy calls on specific things, but I'm making sure I pay a low price for those calls. But when I find instruments where the options are very, very expensive, I want somebody to take the other side of that trade. I'm going to sell that put. I'm going to take the obligation, and I'm also going to take the very high probability of being right, because I'm being paid for this obligation. I'm being paid to buy the stock well below today's price. And I want to show you a couple of opportunities with that. And what I'm talking about is equivalent to rolling dice. So I want you to think about dice for a moment. If you've ever gone to a casino, or if you ever played dice, right? Each die has 6 sides on it. And when you take a look at 2 dice and you roll 2 dice and you're picking one number, okay, of those 2 dice, some numbers have a better probability of coming up than others. There's a reason why people pick a 7 when they roll dice, because a 7 has more upside outcomes than any other number. The only way you can roll a 2 or a 12 is for the dice to come up 1 and 1 or 6 and 6, because every other outcome is not going to be a 2, or every other outcome is not going to be a 12. In order to roll a 7, I can get a 1 and a 6, or I can get a 2 and a 5, or I could get a 3 and a 4, but I can also get a 4 and a 3, a 5 and a 2, and a 6 and a 1. There are 6 different ways to roll a 7. There's only one way to roll a 2. There's only one way to roll a 12. And we take that probability and we put it towards how we trade. Okay? We put it towards how we trade. And so I'm looking to be on the other side. I want somebody to roll the 2 or to roll the 12. And I want to be right if they don't, because most of the time they're not going to roll that. Now, let's talk about that in stock perspective. So let's say our stock is at $260, like the United Healthcare example I was showing you. All right. If you were making a trade and you had to be at break even or better above 360 or below 160, would you rather be in a situation with the stock at 260? Would you rather want to make money if it goes above 160, or would you rather make money if it just stays above 160? I'd rather be down here, because if the stock's already at 260, I'm already 100 points below where I need to be to make money. Where if I were on this side of the equation, I need the stock to move 100 points before I start making money. That's the probability that we put in the stock market. All right. Let's get back to United Healthcare. So what I do is I look at statistical probability, and you can too. What I do is I look at where the stock has to be by a certain time. And so I use something called probability cones. Let me blow this up for you. So probability cones really, it gives me a statistical average based on where the stock price has been, where it is the likely outcome is going to be in the future. So if you look at the blue cone here, the blue cone has a mathematical probability that this stock price is going to be in between the lines on the blue cone an average of 68% of the time. It's likely going to be in the red cone 95% of the time. Okay? And what I look for is I look for trades that are at that 90% or better probability. Now, there are several ways that you could find probability. You could probably go online and type in a number and type in some stuff, and you can get probability. There's probably some brokerage firms that will allow you to look at this too. You can use options to get statistical probability. I have my own way of calculating it, but basically what I'm doing is I'm going out in time and I'm finding an area which I call the buy zone. And so the buy zone for United Healthcare that I'm looking at right now is around $160. And that gives me that 90% or greater buy zone. It allows me to get paid by selling an option with the 160 strike. I want to sell that 160 put with United Healthcare. It obligates me to buy the stock at 160. I'm going to get paid for that obligation. Okay. So my rules for selling puts are as follows. First of all, it has to be a liquid stock. It's got to be part of the Penny Pilot series of stocks. Now, if you go to the Chicago Board Options Exchange, you go to cboe.com, and you go into, you can find their Penny Pilot list on cboe.com. Another place you could go is MIAX, MIAX.com, and you can go, or you can even Google, if you want to do it this way, you can Google Penny Pilot stocks, and it'll give you a couple different websites that you can find that list from. That's the list of stocks that I draw from, because anything outside of that is going to have lower liquidity on the options. I want to have the most liquid options that are out there right now. That's number one. Number two is I look for that higher than average implied volatility. And one of the ways you can do that is whatever's in the news is going to be traded more, and it's going to have a higher than average payout. All right, that IV is what I call the payout. Finally, it's got to have a statistical probability that it's going to be profitable statistically 90% of the time or better. So let me walk you through this one more time. So I talked about statistical cones. I find the 90% winners using the probability cones. Okay, remember, the blue cone, for me, 68% of the time, we're going to be inside the blue cone. 95% of the time, we're going to be inside the red cone. Because I'm looking at buying, I'm going to be looking down here on the bottom side of the cone, and that's going to be my buy zone. Next, I check the payout. Now, there's different ways you can find implied volatility, and I'm looking for something called implied volatility on the stock that I'm interested in. And what I'm looking for is I'm looking for the implied volatility chart or the payout chart to be on the high side of the chart. So what you're looking at here is this is, and I look from anywhere from 6 months to a year. Typically, I look for a year, and I want to see where this chart is now versus where it's been over the year. This line moving up on this particular chart, this is a high payout, a very high payout, because look at the lines. They're up here at new highs. It means it has new payout highs. And so then finally what I'll do is I'll look inside the options and look for a trade. How I scan for my put selling strategies are I am able to, with my data, look for those statistics, look for those high payouts, and run a scan where it shows me at the very top what I need to be looking at that time. And again, I look for low slippage. That's the area where I go into the Penny Pilot stocks. That means they have options that expire that are inside the 5-cent bid-ask window. All right. I also look at weeklies too. That drills it down even more. Options that have weekly expirations. That high IV, yeah, that's the high payout. Probability of 90% or more, that's looking at the probability cones. And my secret sauce is mixing all of these together. And I have a way of mixing those together where I see them flow to the top, which ones pop up to the top of the list. So my rules-based trading is, and I say this again, spot the opportunity, okay, which is what I just showed you. Sell a high probability put. Plan, execute, and manage. That means go ahead and and plan it, execute it, and manage it on your broker's website, and then just simply rinse and repeat. And I want to do this on a regular basis. Let's call it a weekly basis. So here's today's deep discounts that I found for those of you watching the webinar. All right. You can get $400 for a 60-day obligation to buy 100 shares of United Healthcare at $160 a share. That's currently trading. That was trading at $262. All right. Also, you can get $113. This is per contract for a 60-day obligation to buy 100 shares of Target at $75 a share. Target's currently trading at 93. And then finally, this is another one I found. You can get $78 a contract for a 36-day obligation to buy 100 shares of Advanced Auto Parts at $27.50 a share. Advanced Auto Parts is currently trading at 34. In each of these real-world examples, we are taking in money to put ourselves in position to buy the stock below the market. All right. In the case of United Healthcare, it's about 47% below the market. In the case of Target, it looks like it's also 40% below the market. In the case of Advanced Auto Parts, we're looking at about 30% below the market. Maybe a little bit less, but it also is less days on the obligation. All right. And by the way, you can determine the option strategy to place based on the obligation. So the 60-day obligations, you're probably looking at July. The 36-day obligations, you're looking at near the end of June. Now I want to take one of these, and I'm pretty sure you know which one I'm going to be talking about today, and I'm going to take you through a real-world experience. So I'm going to take the top one, United Healthcare. I like that $400. So back to the stock. Again, here's United Healthcare. Here's the drop that's happened. And again, all of a sudden everybody's talking fraud. Everyone's talking Medicare fraud. It's all over TV right now. That's pumping the premiums. That's pumping the payout even more. I like that. So I have the ability to get this stock for $160 a share, and they're going to pay me somewhere around $400 to take this. So I look at the prices for the July expiration, and you can do this with any broker. I just pulled this off my website. The 160 puts that expired July 18th. When I pulled this up, they were trading $3.90 on the bid and $4.10 on the offer. So right down the middle, they were trading for about $4. Perfect. That's what I want. Look, the 65s are $4.48. The 70s, the 170s are $4.98. The 175s are $5.58. I like the ones, and they're all, I believe, the 160s, 165, 170s all fit the bill. They're all in that area where they have a 90% probability or better. Their payouts are very, very high. All three of these. I just like that. I'm going to take that conservative one. I'm going to use this as my real world example for today. So I like it at 4. I'm going to place that order. So when I went into United Healthcare, and I brought this up on Robinhood, it was trading at this time $262.50. It was down 14.78% at that time. I'm going to sell the put that expires in July. You can see that right there on my screen. Here's the 160 put. All right. It's showing $4 in the middle too. It's showing $3.90 by $4.10. Now I'm looking at this and I'm thinking I can place this trade at 4. And the $3.90, they had 44 on the bid and they only had 1 on the offer, which means, once that 1's taken out, that price is actually going to go up. Maybe I might get a little bit more for that trade. All right, so here we go. So here I placed the order, and look, by the time I hit the order place, now it's $4 by $4.10. The bid went up. So I'll place it for $4.05. It says medium fill likely. Good for the day, which means if I don't get filled today, I'll take a look at it again tomorrow. Maybe it'll be a good opportunity the next day, maybe not. Estimated credit $404.96. Now, why not $405? Because I got to pay a small fee for this option. I review the order, place the order, boom, immediately gets filled. New position, 1 contract, filled. Took $404.96. Actually ended up getting $405 minus that multiplier. All right, so there's a real world trade. Selling the UNH July 18th, 2025, 160 put, and I got $405 for this one. So let me evaluate what happens from here. So there's 3 things that are going to happen by July 18th. First of all, the stock could be above 160. If that's the case, puts are going to expire worthless. I'm going to keep that full premium. Fantastic. That's probably, with probability, what's going to happen. You know what else is probably going to happen? The stock's going to be at 160 or above 160. Even if it's at 160, the puts are still going to expire worthless, and I'm still going to keep the $400 per contract. If the stock's below 160 at expiration, the puts could expire in the money. I'm still going to keep the $400, but I'm also going to get the stock at $160, which, you know, that's a low probability. In fact, with this one, there's a 3% probability, 3% that statistically that I'm going to get this stock. So I have 60 days in this position. And in 60 days, I might keep the, more than likely, 97% chance I'm keeping that $400, right? So that is the strategy for United Healthcare. Here is my track record for 2025. These are all published. These are all stocks that actually traded at these prices. And I'm showing you every single one of them. You can see winner, winner, everything's in green. Win, 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 win. GME, SoFi, we took a couple snap trades, Micron, Dollar General, IoT was on this list. Super Microcomputer was on the list. I'm sorry, Dollar General, Dollar Tree, OKTA, FTNT, Palantir. Palantir was our latest, the latest exit. Lyft. There's SoFi again. There's Avis Car Rental, Roblox. All right. SOX was on here. That's the semiconductor index. We even took a trade on the short VIX. All right. So every once in a while, we get ETFs in here. We'll get some ETFs in here every once in a while. So we see those. In fact, we have an ETF that's in play right now that's on the open position doing well. So right now, all of my closed positions for 2025 have been profitable. We've had 0 losers for the year. So far this year, my multi-year projections, by the way, last five years, we've been at 90%, over 90%. For 2025, 19 trades, 19 winners, no losses. Average hold time on these trades has been about 60 days. Okay. And the followers I have are equally as happy. Okay. Al's happy. Thanks from Pearl City, Hawaii. Brett's happy. Thanks for the opportunity, Tom. Fan and following for several years. Gavin's happy. Best teacher option traders, hands down. I appreciate the comments that everybody brings out to me and tells me about. Here's Sergey. Here's Ken. Been a member of yours for 4 years now. You know, I've actually been doing this particular strategy and publishing it now since 2020. So we're now in our 5th year of teaching this particular strategy. My goal for the rest of 2025 is to do about 5 of these cash flow trades a month. All right. Now, I don't offer guarantees on my trading, but the projections based on the published returns, the long-term track record we have, this year's track record we have, you know, if you look at a contract, you know, a contract trade, you're looking at about $689 a month. That's it. That's one contract, you know, on the 5 cash flow trades a week. That's $8,256 a year if you did a 1 contract trade. If you did 5 contracts, you're looking at the $3,444 a month, or over $41,000 a year. That's all in 15 minutes a week. That's my goal for those of you that do this strategy and want to do it with me over and over again. And we're going to do it through something I call Cash Flow Trader. Cash Flow Trader is a way of following me every single week, spotting these great high payout opportunities. Now, I do weekly trade recommendations using what I call the Instant Trade Alert System. The Instant Trade Alert System looks like this. When I spot an opportunity, I get it to you instantaneously. It doesn't go through from me to another researcher, to an editor, to somebody on the email team that finally gets it out to you 2 hours later. No, when I spot the opportunity and I put it together for you, literally seconds after it leaves my desk, it's in your inbox. That's how fast this goes. Comes with regular videos and commentary, a couple of times a week. Also, the quick cash flow starters guide and access to our members only website. Let me show you what the members only portal looks like. So you're going to get these instant alerts that are going to look like this. Entries will be in green, adjustments will be in orange, and every once in a while we make an adjustment, and the exit will be in red. So it's very color coded to let you know whether you got an entry, an adjustment, or an exit. And these come very, very quickly to you. I have weekly training videos. And the weekly training videos, actually, we talk about what's going on in the markets. We talk about the strategy real quick. We talk about the open and close positions, all of them. All right. I have weekly commentary as we come up for payday events. All right. Then I will let you know what's happening. You know, like for this one, here's a payday event we had that says cash flow trade update. Nothing to do except take the profits. All right. And I talk exactly about what we're doing and how we're taking the profits on those positions. We have a dashboard that shows you everything that's going on. And this is 24/7 access to the website. Also, what I'm doing is for this particular group, for those of you watching me, my most valuable group of followers, I'm going to bonus in my live trading webinars for the rest of 2025. So come and join me live every week. I do them Mondays. In fact, I'm actually changing them from 10 a.m. to Mondays at noon. So Mondays at noon, come and join me as I show you what's going on in the markets every single Monday. And if we find live trading opportunities, then I put them to work there with you and I live in the room. This particular research product comes with a money-back guarantee. All right, so try it risk-free. You know, I mean, within 30 days, if you're not satisfied with everything I'm going to give you, just contact my team. I give you a full, no hassle refund. So you know what the word is on cash flow? The word is, I mean, I've got it. I've got tons. I've got tons of information from Deborah, from Boy, from Grant, Roger, Hunter, Wally. They all have great information. They've had a great time with this service. I want you to come and join me as a member of our cash flow trader. Now, how about pricing? Here's what I'm doing. So my publishers in the past have priced this product from around $3,000 to $5,000. My live trade sessions, by the way, are part of a separate package that we charge almost $2,000 for. So we're talking about a $7,000 value here. Now, big thing changed. I'm now self-publishing. That means no fancy high-rise offices, no staff, no huge staff, no office politics, no holiday parties, none of that stuff. And what that means is huge cuts, all right, on my costs, which also mean huge cuts on your costs. So click the link below today, and I'm going to give you an 85% discount off our regular price, folks. Okay. So you have a link down there below that you can check out. And I mean, you know, to close up the webinar here, so far this year, I've got a 100% win rate. All right. If you'd have followed me on 5 contracts on each trade, you'd be sitting on about $13,000 in cash right now. That amounts up to about $41,000 a year. Now, I can't promise that we're going to keep the 100% win rate going. I don't offer guarantees when it comes to trading. What I can offer you is that I'm a pattern trader, and this is a great pattern. Not only what's happening this year, but the long-term pattern, the long-term track record we have is over 90%. Bottom line is, with Cash Flow Trader, you got money coming in every month. You've seen the system. You've seen the opportunities. I've taught you exactly what I do to find these cash flow trades, and now it's your move. If you like what you see so far and you want to continue with me, then click the link below. You get Cash Flow Trader at an 85% off the normal rate, and let Wall Street Let Wall Street's biggest companies start paying your bills. All right. I want to thank you for your time. Thanks for watching, and I hope to see you soon as a cash flow trader.